Hello, everyone. Is everyone able to hear my voice? Can please somebody respond if they can hear my voice?
Yes, ma'am.
Okay, thank you. Okay, so now I'll share my screen and then we'll proceed. Okay, so my name is Tehzeeb. I will take a few of the chapters from economic survey. And from what has been told to me, probably all of you have already gone through the first 3 chapters. So we'll be starting with the 4th chapter today. All right. Okay. So in general, since you people have already done the first 3 chapters, so you must have come to know exactly the tone of the economic survey as such. The economic survey that has been written for this year has tried to highlight the kind of changes that have been coming up in our economy since the the kind of crisis that the world went through. So in the last few years, we have seen that, first of all, COVID is the biggest thing that has been around. After that, there have been certain other developments also, such as the Russia-Ukraine war. So in general, the world has seen a change in the economic standing of each country. The developing countries as such, when we talk about them, for the developing countries and the emerging countries like that of India, we see that our position is kind of different from that of the developed world. Because in many of the countries, the economy has not started developing in a manner wherein the stake is so high that every global change will bring about a change in their economy. But as far as India is concerned, India is one country that is an emerging market, that is one of the biggest market, that is one of the centers which has the potential of becoming the largest consumer of the entire world. It is already much there. And in the next few coming years, as per all the big organizations and the think tanks of the world, India is supposed to become the main center of the economy of the whole world. So that is a basic understanding of India for all of us. As far as this economic survey is concerned, it has highlighted the significance of India. It has highlighted a few basic points about the Indian economy, such as, first of all, the resilience of the Indian economy. Repeatedly, like while you will be going through these chapters, you will get to read about this particular fact that no matter whatever has been happening in the world and the countries have been grappling through all these things, India has been able to do well enough. It has been able to protect itself to a very large extent, despite the factor that we have the largest diaspora in the world, despite the factor that we have the largest population in the world. So if we start with today's chapter, like the first chapter for today, that is chapter number 4, which is the monetary management and the financial intermediation. As the name goes, they have added the term a good year to the name of the chapter. Now, why are they doing this? You must have seen in the early 3 chapters also, they have been telling us that it has been good enough for us. And same thing has been told in this chapter also in the very beginning. It is like giving the subject matter that don't worry, whatever is coming is good enough. All right. So the first line in itself is telling us that most of the countries have been facing problems. They are mentioning the Federal Reserve, which is talking about the United States. They are mentioning the Bank of England. They are mentioning the European Central Bank. So the Europe is also being mentioned. UK is also being mentioned. US is also being mentioned. These are the economies that we always considered. Like since ages, we have been considering them far ahead of us, far more balanced, and the countries that have been able to manage all sorts of crises. But what this economic survey is telling us, that all these countries, all these parts of the world, they have been facing problems. But as far as India is concerned, India did, these problems did come to India, but India was able to manage these well enough because of the policies of its government and the kind of things that the RBI came up with. So in this chapter, what we'll be studying is basically the problem of inflation, the problem of inflation that has been targeting the market of the entire world, and how our country has been able to work with it, and how we did it in a scenario where we were trying to get back to the a normal phase of economic development in the wake of COVID and in the wake of the newer developments in the world, such as the war that is taking place. All right. So the first thing that we will be looking into is inflation. Why did inflation come up? Why this inflation was so high that the whole world had to struggle through it? Then the second thing we'll be looking into is the response of the world and response of India. And then the third thing that we'll be looking into is how our economy has been resilient, in which we will go through understanding a bit about the changes in the NPAs, the non-performing assets, how that has impacted the credit system of the country, how we have been able to do well in our insurance sector, how we have been able to do well in creating capital, in creating capex. So all these things, the big terms of the economy that we generally talk about when we talk about the monetary policy of any economy or the fiscal policy of any economy, all those terms have been referred to in this chapter. So when you will be studying this chapter, you have to keep two things in mind. First of all, with respect to prelims, there are certain terms that have been mentioned here. So I'll be teaching those terms also. We'll be going through the data of those terms also. But in prelims, what can happen is that you can get one objective type based upon the concept of those terms. They can directly ask the meaning or they can ask the trend. Okay, so the first thing that every student must remember is that when it comes to prelims, the basic form of questions from economy that are asked are first of all about the national income. So national income, when we talk about that, we talk about the terms that are like GDP and the ones associated with it, like GNP, NNP, all those things. Jo national topic, national income ke topic mein whatever terms are there. So those are the terms. They are the first love of UPSC. So they will be asking one or two questions about that. The second thing is that you need to understand the trend, whether something has improved in a steady manner, or it has declined in a steady manner, or there has been a tumultuous development, or there has been some kind of a new unique kind of a development in certain sector or certain area. So those are the areas from which they will be asking. The third thing that you have to remember are newer terms. Like for example, in this we will be studying about the hawkish stance, a word they have used in this chapter, that is hawkish stance. Very easy term, but one needs to know because they can just simply ask the meaning of this term as a simple objective. Okay, so to study these chapters for from the prelim point of view, these are the few areas that you need to go through. When it'll come to mains, we'll be telling you exactly how you need to elaborate on these things. But the one point that I can tell right now also is that economic survey easily gives you the idea of the kind of questions that will be asked in mains, because it directly tells you the areas of the economy that are extremely significant in the minds of the people who are associated with the governance of the country. Okay, so let's without wasting much time in understanding all these things, I'm sure since the prelim is around the corner, you people must be in a hurry also. So we'll study this in the best possible manner and in the shortest time possible. Okay. So the first thing that the economic survey here is mentioning is that there is something of a global scenario. Because of this global scenario, the scenario that I mentioned, RBI has initiated its monetary tightening cycle. Now, along with that, it is also mentioning that it is moderating the surplus liquidity in the market, whereas other areas like government security, credit disbursement, insurance and pension sector, etc., they have performed well in comparison with the other global economies. So what the economic survey is trying to tell us, that there have been issues in the world. Issues such as we have been mentioning, there was COVID, there was inflation, there was drop in the value of the rupee in the whole world as such. We have seen, then we have seen the war, we have seen slowdown, we have seen balance sheet stress in our country. Like we will be studying about the banks also, balance sheet stress, the corporate stress that we have been seeing. It has been there as a part of our economy since a few years. So all those things are going on, and along with that, the global scenario has also turned towards these adverse problems. So what the RBI has been doing is that it is also trying to show some dear money policy. Now, dear money policy, what is that? Dear money policy simply tells us that the RBI comes up with certain mechanisms through which it tries to reduce the liquidity in the market. Now, what do we mean by liquidity? It's a simple thing. I'm sure you people, since you people are about to appear for the exam, you people are well versed with these terms. But as such, liquidity means the kind of money that is circulating in the market. The money that circulates in the market has to go through various hands. The hands may include the corporate sector, the household, the government. Then there are certain sectors that take it out and then they keep it. And this is a significant part of our economy, because we are a economy that is based upon saving, unlike the other Western economies, for example, the USA or the Mexico, etc., where we see that the economy is based upon the spending. That is why we see the tax rates are also different in our country and those countries. All right. So when all these things, they came together. So the RBI decided that what we need to do is that we need to pull out certain money from the economy. So for that, they came up with certain ideas, what all we need to do. Those are the things that wherein we'll have certain new terms that we'll have to understand. Now, as a basic student of economy, we all understand that there are certain basic terms such as the repo rate and the reverse repo, and then we have the standing facility. One of the most common standing facility that we know of is the marginal standing facility. So those are the kind of things that the RBI has been traditionally using, so that whenever it wants to reduce the liquidity, that is when we call it tries to do the sterilization of the economy, so that the currency value remains good enough for allowing us to grow, as well as allowing us to control the liquidity. Now, what has been happening in our country is that, see, here they have mentioned certain monetary development. First of all, the thing that they have mentioned is about the commodity prices. They are saying that there has been an increase due to inflationary pressures from supply chain normalization after the pandemic and the conflict. We have been repeatedly mentioning these things. Now, the thing is that we will be studying about the inflation also soon. Now, as far as inflation is concerned, we all know that we study it in two ways. We study it in the form of CPI, and then we study it in the form of WPI. We will now realize that as far as the inflation is concerned, our core inflation was fine enough. But because of the food and the fuel, we saw that there was some upward movement in terms of our inflation, even though slowly we have been able to control it also. And therefore, we will see that in the beginning, there was a large divergence between the value of the CPI and the WPI. Okay, so for that, we came up with the tightening. Now, for the tightening of the economy, the economic survey tells us that the monetary policy committee has came up with a certain new thing, which it is calling the standing deposit facility. So this is one term that you need to focus on. Okay, so first thing that you need to know is the monetary policy committee. Very simply, it is a 6-membered committee that is there to decide what kind of rates should be there in the market so as to maintain a certain amount of liquidity in the market. Okay, now the kind of rates that we talk about for maintaining the liquidity are, first of all, the repo rate. Now, very simply, it is mentioning that the RBI lends money to the commercial market at a certain rate. That rate is repo rate. Now, what is the function of this? When the RBI is lending money to the commercial banks, that is, it is injecting money into the economy. That is, it is increasing the liquidity. Therefore, repo rate determines the amount of money that will go into the market. So that is the first way in which liquidity is manipulated by the RBI. Now, what is the reverse of it? When it wants to take away the money, it will start taking the money back and giving the bonds in return. So what was the RBI doing? How does the RBI, under very normal situation, how does the RBI deal with the liquidity? It deals in the form that it gives money into the economy. And how does it do it? Because these people are made to sign certain bonds, and then it is the exchange of these bonds that helps in maintaining. We have one repo rate, which is used when the money is being injected, and reverse repo when the money has to be taken back. So that is what is normally done. Then few years back, we started realizing that there is another mechanism, which is a standing facility mechanism, which is known as the marginal standing facility rate. Now, marginal standing facility, it is simply mentioning it is a rate at which the RBI lends funds overnight to scheduled banks. Okay. Now, what is a scheduled bank? One must know. Scheduled bank are the banks that are mentioned in the RBI Act of 1934. All right. So the RBI gives certain funds overnight. whenever you read about the monetary mechanism of the economy, we get to study that there are certain rates that are overnight, certain rates that are given for like 14 days money exchange. There are certain rates that are put up for exchanges that take place for a month's time. So therefore, we have certain rates such as the MSF facility rate, or we have the call rate, or you will read about the LIBOR and the MIBOR, etc. I'm sure by this time you people must have slight idea about these. So one of the mechanism is that there are overnight exchanges. This is to maintain certain basic liquidity in the bank system such that the banking does not collapse. So for that, the banks are continuously in exchange with each other. They are continuously interacting. One of those rates is the marginal standing facility. Another, now in this marginal standing facility, or an MSF, there is one thing that is mentioned here also, that securities are kept as collateral. Now, what is a collateral? Whenever certain loan, like for example, somebody wants to start a business, they go to the bank and they ask the bank manager that I want to get a certain loans for starting a business. So they tell them that, all right, you can keep something mortgage, you can keep something as a collateral, so that in case you do not pay us back, we will be taking over that piece of land or that piece of property. And since you people must have read about IBC, I'm sure. So in that also we talk about that. Then there is also asset reconstruction companies. So all these things are based upon the presence of these collaterals. The most significant act that has come up with respect to the banking system taking over certain collateral or certain property was the Sarfazi Act of 2002. So with that, you must remember that there is a collateral involved whenever money exchange is taking place. But now, am I audible? Am I audible to everyone?
Yes, ma'am.
Okay. I'll continue sharing my screen. All right. So we were talking about the standing deposit facility. So standing deposit facility is simply another tool, and it is an easier tool, a better tool, in the sense that there is no collateral needed when this kind of a rate is set up for absorbing the liquidity. So repo rate is one rate that is useful when we are injecting, and then standing deposit facility, MSF, or the reverse repo, these are useful when we are trying to bring back the liquidity from the market. So now why are we focusing on this whole area so much is because of the reason that this inflation was the major problem that was informing the economy. Therefore, the RBI came up and it came up with a solution for all these things. Now, another thing that the economic survey has been talking about is about the money supply. Now, when we talk about the money supply, we people mostly talk about...
Screen is not visible.
Screen is not visible. Okay, 1 second. 1 second. Am I audible as well as is my screen is visible?
Yes, ma'am.
Okay. Okay, so the next thing that comes to our notice in this survey is that it is talking about the money supply. It is mentioning that both reserve money and broad money has increased by certain percentage, 10.3 and 8.7 year on year respectively. And also it is mentioning that the money multiplier has remained stable at an average of 5.1. Now, why is this a good information for us? Or why is it mentioned as a part of the good year? So the thing is that when we talk about the money supply, we talk about certain aggregates or certain clusters. Now, when we talk about the money that is present in the economy, one needs to remember that first of all, we will be talking about what is the money that is in the currency circulation. So currencies that is circulating, matlab the kind of currency that is present with the people in the market, etc. Then we talk about the kind of currency that is with the banks. Then we talk about the currency that is with the RBI. Then we talk about the currency that is parked in the RBI or in the bank for 1 year or less than 1 year or for more than 1 year. So these are the two other kind of distinction. Then we have certain kind of money that we call as the time deposits. All right. Then there are certain which are as in like these are the kind of deposits that are there that are timed, like which are, for example, we have the fixed deposits. I will deposit my money for like 5 years and I can take it out only after that. So those kind of distinctions are made with respect to less than 1 year or 1 year or more than 1 year, that kind of deposits. And then we have the saving deposit. So those different kind of money is there. Based upon these different kind of money, we try to analyze the kind of money that is present in the economy in a totality. So the first money that we talk about is M0. M0 is the reserve money, the basic kind of money that is present in the economy. Then we keep on adding fewer things to it. Like for example, if you will add the time deposits to it, it will become M3. Then you will add the other kind of deposit, it will become M2. So those kind of M0, M1, M2, M3, those kind of things, they are there, they are present there. Now, why are we calling M3 as the broadest money? It is known as the broadest money because it involves almost all kinds of money that is present in the economy. The one that is in circulation, that is the one that is in the present in the form of demand deposits, the one that are present in the with the RBI, with the kind of money that the banks have kept with the RBI, the kind of money that the post office saving banks also have. Like, you know, there are one should know that before Jan Dhan system came up, most of the people who had certain idea about saving their money in a institutionalized manner but did not have bank account, they used to preferably use the post offices. In fact, once the Jan Dhan Yojana came up, the post offices were used much more by the people because that was much more easily accessible. We have tried through Jan Dhan Yojana that almost everyone should have a bank account. But along with that, the post offices have also served a good deal in keeping the money in an institutionalized manner in the economy. So, based upon that, what the survey is telling us is that the money multiplier, which is a ratio of the broad money and the reserve money. Like broad money is the broadest possible, the biggest cluster of money that we have, and reserve money is the basic, the one that we start with. So if we go for a ratio of that, we have seen that on an average, it has remained stable. Now, when we will study further, we will realize that this has actually happened because certain sectors of our economy, like for example, the food industry, has performed really well. So because of these things, what we have seen is that the money in the market has been able to remain and give a good picture, a stable picture overall. All right. So we have this concept. Now, as far as the liquidity condition is concerned, we have already been talking about this in great detail. So what it is telling us is that the liquidity condition has been moderated. The inflation has been brought about under control. The liquidity condition that was surplus post-COVID-19, as in the inflation that was more post-COVID-19, that has got moderated in the economy after the money tightening policy. Then the second thing that you need to understand is the decreasing gap between WACR rate and the repo rate. Now, what is it mentioning? It is saying that the gradual withdrawal of the surplus liquidity pushed the weighted average call rate, the operating target of the monetary policy, closer to the policy repo rate on an average basis. So what it is trying to tell us is that we have been trying to establish a kind of a balance in our economy. The focus has been to take away the liquidity, but not so much that completely the growth gets hampered. Therefore, what we have done is that we have targeted our call rate. Now, what is a call rate? As I was already mentioning, that there are certain rates that are associated with the exchange of money, which are defined by certain time periods. Call rate is one such rate which comes into play when we are doing transactions overnight. So okay, so call rate is one that kind of one such rate. Now weighted average call rate. Now, whenever we say that weighted average, it is simply a mathematical calculation. When you make the calculation for an average, you are weighing every component separately. This is the similar kind of calculation that you make for CAR. All right, capital account ratio, you people must have read when we are trying to calculate the tier 1 and the tier 2. So that kind of weighted average is being calculated for the call rate also. That call rate is decided. Now, what the RBI was trying to do is to bring that call rate closer to the repo rate. Policy repo rate simply means repo rate. Now, the aim of the whole process is to reduce the liquidity, but not so much that the economy's growth collapses. All right. So the focus has been to bring the call rate nearer to the repo rate. Abhi tak, what we have understood that repo rate we try to maintain so much so that we are able to give liquidity into the economy, because that liquidity will provide the capability to the banks to lend money further into the market to the common people like myself or yourself. All right. So the repo rate is fixed in such a manner so that the loans are affordable enough for the general public. So when that, now the target is to bring the call rate nearer to this. So what are we trying to do? On one hand, we are saying that we are trying to pull out the money from the market. And on the second hand, what we are trying to say is that we are trying to maintain our rates at such an amount or such a digit such that we are also maintaining some liquidity in the market such that a good balance is maintained. All right. Now, the monetary policy, therefore, has seen a kind of a transition. Lending and deposit rates of the bank increased during the financial year 23 in consonance with the policy repo rate changes. This is exactly what we have been studying. I'm hoping that you people are getting the point. Lending and deposit rates of the bank have increased. Why did the rates increase? The rates increased because we were taking away the money from the market. When we took away the money from the market, how would we do that? We would do that by using all these tools that we have. Then we have been increasing the rates, the rate of interest. The loans became much more expensive. So the lending in itself became much more expensive for the people. All right. So this is mainly what has been done by the RBI when it tried to deal with the banks, with the kind of money that the bank has been putting into the economy, and how the RBI has been controlling the flow of the money into the market. So that is the one section of this economic survey, that we have also tried to do what is being called as monetary tightening. We have been able to do that, but simultaneously we have been able to do it in a slightly different manner so that we are also capable of maintaining our economy in a certain particular manner. Now, one important thing that we need to learn here is that the survey is also mentioning about the government security market. One thing that it has mentioned is that there has been increased yields in the market. The yield on a 10-year government bond rose in 2022 after stagnation in 2020 and 2021. Now, one may see this graph also that is given here. The government security yield is easing since July with decline in the oil prices and the global bond yield. Now, we will try to understand, first of all, this thing. As far as bonds are concerned, we should remember that bonds are marked by one particular feature, that is their price is inversely proportional to their yield. Now, when the market had a lot of money, the people went ahead and they bought as many bonds as they could. Okay, so people were buying bonds. Now, bond was becoming something that was high in demand. So since it was high in demand, the prices of the bonds went up. When the prices of the bonds went up, since we are already looking at this equation, therefore we know that the yield of the bonds had been decreasing. But all that we have been talking since the start of this lecture is that the government has tried to reduce the liquidity. Therefore, the money reduced. Therefore, the buying capacity reduced. Once the buying capacity reduced, therefore, people started decreasing their instinct for buying bonds. Now, when they started decreasing their instinct for buying bonds, therefore, the demand effectively decreased. Once the demand decreased, the price decreased. Once the price decreased, the yield of the bonds increased. And that is what is the what the economic survey is mentioning here, that the yield increased. So what I'm trying to tell you, you need to understand this thing, that earlier what we had was that there was more money in the market. Since there was more money in the market, there was more money in the hands of the people. Since there was more money in the hands of the people and the corporate and everyone, people started buying bonds. Now, when the RBI decided that now we need to take away the money, money was reduced. When the money was reduced, people reduced buying bonds. When people started, decreasing the kind of bonds that they were buying, therefore, effectively the demand decreased. Once the demand decreased, the price had to fall. Once the price fell, the yield also had to increase, because price and yield are inversely proportional. So that is what it is mentioning here. Then the second point that is mentioned is that bond market volatility stable. The domestic bond market was more volatile in the first half of the year due to the various factors like crude prices, hawkish stance of central banks, and the increasing pressure on the rupee. Now, this is something that we need to understand, and this term we need to preferably remember. This might come up. If not UPSC, then probably this is something that you can write in the mains as a good term, or probably in some state exam. Now, what is happening here is that we have been talking that the RBI was trying to control the inflation. So it was coming up with policies. While the policies were getting implemented, certain instability was there. But once the policies settled in and the effect and the success of the policy started appearing, therefore things became stable. Therefore, what it is saying is that bond market, earlier it was a little bit volatile in the first half of the year, but later on everything became fine. Now, the point that it is mentioning, the reasons that it is mentioning for the kind of instability is, first of all, the crude prices. These are the prices. We will get to study about this also. Like, for example, we are importing a lot of minerals, we are importing a lot of oil, we are importing a lot of fuel from the other countries. That is one big problem. Then the hawkish stance of the central banks is the stance where the bank tries to control the inflation, etc., in the economy at the risk of letting the growth go down. So hawkish stance is that kind of a method of controlling the economy or controlling the monetary policy of the country in such a way that even if the growth drops, we will not be much bothered about it, because the main focus has to be to control the inflation. So for a certain amount of time that was there, but then we also decided that the growth has to be the first priority, and we can easily balance between the two. Then the third reason it is mentioning is the increasing pressure on the rupee. We have been studying about the pressure on the rupee and the falling rupee, etc., for a very long time now. It has been a year or more than that, 2 years since the pressure on the rupee has been one point in picture. The conditions stabilized and volatility declined during the second half of the year, as we have understood by now. Okay. Then a few terms that a person should know. I'm sure these are the part of the static syllabus, so you would know. The government securities. Government securities, again, they exist in different ways. There can be government bonds or securities that are given for more than a year, for a very long time. Then there are certain others that are signed for shorter time. Now, the ones that are signed for shorter times are known as the treasury bills. There are 3 different types of treasury bills, as are mentioned here: 91 days and 182 days and 364 days. The ones overall, these are known as the government securities. Another one term that we need to remember are the state development loans. These are the dated government securities issued by the state government. As simple as that. All these are bonds. The ones given by the central government, the ones given by the state government. Just we need to remember that treasury bills are the ones that are limited to within a year. See, the maximum time is 364 days, when the year has 365 days. So that's the classification of the bonds of the government. Now, another factor that the survey has talked about is the banking sector. Now, as far as the banking sector is concerned, we need to remember that there has been a steady increase in the asset quality. Now, scheduled commercial banks, we already mentioned what these are. the point that it has mentioned that there has been a steady increase in the asset quality in itself is a promising mention by the economic survey. This mention is actually based upon this basic realization that the NPAs have for us, it has reduced. Since the NPAs have reduced, therefore the capability of the economy to create more capital has also become better. Now, what it is mentioning is that gross non-performing assets. Now, what are non-performing assets? Non-performing assets are simply those loans, etc., or those help that has been given by the commercial institutions that are not coming back to it. Like the bank gives loan to people and the people are not returning that loans. Those assets become non-performing assets. Now, those assets are classified based upon the kind of days that have passed since they were supposed to pay back this money and they are not paying back. So they have been classified in various different manners. In general, overall, all these NPAs, these have seen a decline. Therefore, this in itself shows that the money is coming back to the banks, etc., to the the monetary institutes of the country. The money is coming back. Because of this, what one can say is that the economy in itself is becoming better. Otherwise, it was a lost part of the economy. Whenever money does not come back to the institution, it is lost, whether it has been taken by a private individual or an organization. So what is happening is that it is decreasing. So that is one good news. The second thing that it is talking about is that the NPA ratio decrease is at a 7-year low. So it is not just that from the year on year we are calculating. It is not just from the last year that the NPAs have reduced. It is the 7-year low. It is in the last 7 years, this is the lowest point. So it's quite a good news. Then the second point is that it is mentioning is the capital adequacy ratio. Now, capital adequacy ratio of the scheduled commercial bank has been rising. What is the significance of the capital adequacy ratio? See, capital adequacy ratio is something, it is the money that a bank is supposed to keep so that if something adverse happens and it loses everything, then it is able to come back to its two own feet. It will be able to stand again. These money, it exists, yes, I was telling you earlier also, in the form of tier 1, tier 2, etc. Like, for example, tier 1 is the money that you will be needing so that while working, if certain problem comes up, then there is another stage of money that you require so that if everything collapses, even then by selling everything, you are able to return everything. Even if the business shuts down, but still you will be able to make up for the losses. So those kind of different clusters of money an institution has to keep. Capital adequacy ratio actually tells us that this money is present there. And therefore, there is a tendency to keep increasing that money. The kind of backing that you have always will help you. It is the bad weather saving that an institution keeps for itself. Now, you people must have studied about the Basel norms. The Basel norms kept coming in 2008 itself. The BIS suggested that there is a certain amount of CAR that every institute must maintain. That was mentioned to us. We tried doing that, and the best news is that we have been able to do much beyond that. So what was suggested to us was like around, calculated to around 11.5 or something, but we were able to maintain it much beyond. We were able to maintain it at 16%. Probably this is some percentage that you must have read in the starting chapters also. So capital adequacy ratio, we people have been able to maintain at a good amount, and not just a good amount that was suggested by the Basel directions, but also even more than that. Similarly, we will see that when the economic survey talk about the NBFCs, we will see that the NBFCs have also been able to do it quite well. They have also been able to keep good amount of money with them, ranging to around 27% or something, so that because of that, they will be able to prevent any huge shocks to the economy. That is why the economic survey is mentioning these. So the first good news in terms of the banking sector, the biggest problem for the banking sector was the rising NPAs. That we are saying we have been able to control. We have been able to bring it down to 7-year low. Then second thing is that the CAR is rising sequentially in a post-asset quality review period and remains well above the minimum capital requirement for the scheduled commercial banks. The third thing is that it is mentioning is that there is a credit growth. What is credit? Credit is the kind of money that goes into the economy that the people, the normal common people and the commercial market is using to create assets in the economy. So credit growth is being seen in our country. Retail credit growth, due to rising demand for home loans. Non-food credit by the banks has been growing. Credit to agriculture and allied activities has also gained momentum. Now, corporate sector funds raised from the primary equity market has declined. Reliance on bank credit for funding the regular operation and capacity expansion has increased. Now, we will look into these points. First of all, it is talking about the home loans. Home loans, we will mention it later on also. It has given a separate section on the home loan also. Home loan actually tells us about the condition of the economy. If people are able to buy their own houses, if people are able to rent their own houses, so it tells us about the general living standard of the people. Therefore, we see that the National Housing Committee, it goes into that. We see that the board, the NHB, the National Housing Board, it does a continuous, a frequent survey of how the housing loans are there, whether people are able to afford something for themselves or not. What we are seeing here is that retail credit growth has been rising in that sector also. Then non-food credit has been increasing in agriculture and even the allied activity. Therefore, we are seeing the urban, we are seeing the rural. In every area, we are seeing that credit flow is happening. All right. And as such, as a common person, we feel that taking loan probably it's in the mindset that maybe when an individual takes loan, it indicates that the finance of the person is not right. But as such, for the economy, when loans are being taken by the people, it is an indication of a robust economy. All right. So then we are also talking about the corporate sector. We see that the funds raised from the primary equity market has declined. This also in itself indicates that the corporates are doing quite well. All right. Because they are not working in the manner that they were working earlier. What we used to talk about, like earlier when we would talk about our corporate sector, we would always mention that there is a dearth of money with all these sectors. But now we are seeing that slowly they do have money, and therefore we see impacts like these. Then they're also mentioning about the NBFCs. Okay. As far as the NBFCs are concerned, we see that there has been a consistent rise of NBFCs credit as well, as proportion to the GDP, as well as in relation to the credit extended by the SCBs. Improvement in the asset quality of the NBFCs. NBFCs deploy the largest share of their credit to the industrial sector. So these are few of the basic things. One thing that you might remember for the prelim is that NBFCs has been deploying the largest share of their credit to the industrial sector, followed by the retail. Industrial sector should be the first thing that should come to your mind. So as far as the NBFCs are concerned, they are allowing the economy to grow by helping the banks, by helping the common people in getting access to the credit. And what the economic survey is telling us is that they are doing quite well. As I had already mentioned, that their CAR is also in a good position. Also, the NPA ratio has declined, as is being mentioned here. Therefore, the banking sector or the NBFCs, they're all doing quite well. In this regard, one example that the survey is telling us is that of the IBC. Now, we know in 2016, the Insolvency and the Bankruptcy Code came in. Now, it was proposed as something that will be able to save the economy from NPAs, from those people who take away the money from the economy and never return back. And this is something that will save the economy overall, so that because it will help us in preventing the loss of assets. What the economic survey is mentioning here is that the IBC has been quite successful. It is telling us about the success of IBC. See, when IBC was made, it was made in such a manner, like, for example, the first when it came up in one particular shape. Then when we started implementing it, we started bringing about certain changes. Now the kind of shape that IBC has taken, it is now taking care of the lost asset or preventing the loss of asset in different sectors individually. What I mean by this is that if an individual is not able to repay back, there is a separate mechanism. If a partnership firm is not able to repay back, there is a separate mechanism. If a big company, for example, a strategic NBFC is not able to pay back, it has a different mechanism. Different number of days are mentioned for recovering the lost asset. Different mechanism, different committees are made for this. Certain committees have been made that are permanent. The kind of membership of those committees that are made as soon as certain organizations start showing certain signs where it will not be able to repay back. So that has also been dealt with. So IBC has become an extensive manner in which any kind of lost asset can be easily recovered. That is what the economic survey is telling us. Now, what we need to take away from this point is that, first of all, from all this section, we should understand what is NPA. We should know exactly what are NBFCs. We should know exactly what is IBC, and we should also know what are ARCs. Okay, asset reconstruction companies used to be there. So we should have a broad understanding of all these terms, since the focus of this chapter has been on these things. Now, what it is mentioning here is that since inception in 2016, when the IBC came up, around 6,000 corporate companies have commenced, the resolution processes have commenced for, out of which almost 70%, that is 67% of the cases have been closed or they have been resolved. All right. Otherwise, we would be in a limbo. In our country, it used to be said, now we are trying to change that it is much easy to open a company rather to make an exit from that. So the exit policy has always been difficult. And whenever some asset is lost, it becomes even much more difficult. So the second point is that 69% of the distressed assets were rescued and helped via the insolvency and bankruptcy process to achieve a realization value around 178% of the liquidation value. Now, these percentages that are mentioned here, as far as UPSC prelims is concerned, you just need to have a broad idea. If somebody is preparing for a state service exam, then probably these exact percentages might be of significance. But for UPSC, you just need to have around 70% things have been resolved, or 70% of the distressed stress have been rescued. Total amount recovered highest under IBC as compared to the other channels. Now, what I was telling you earlier was that there is something called the Sarfasi Act. There is something called the Debt Reconstruction Tribunal, or there has been Lok Adalat. All these have been targeting this main problem that many a times we tend to lose our assets. So several things have come up, several resolution mechanisms have come up, but IBC, it is mentioning that it has been quite helpful. It has been one of the most useful because it has been able to recover the highest amount. All right. Then we have the next point, which is the capital market. All right. Now, poor performance of the global capital in financial year 2022. Global macroeconomic uncertainty, unprecedented inflation, all these problems that we have been mentioning have been there. Now, as far as India is concerned, we have been able to save ourselves. All right. So what we are telling is that, as such, the capital market of the world, we have been seeing this in news also. These are such prominent issues of the world economy that even if a person who is not as educated as you all, since you people are the most educated because you people go through the newspaper every day and you people are extremely well informed since you are preparing for this exam. But even if a person who is not as much into understanding what all is happening in the world, even a lay person would know these things, that the capital market in the world is not going through a good phase. So in that scenario also, we have been able to take care of ourselves. So that is the focus area of this economic survey. We have also been able to recognize the kind of problems that we people have had, like the other nations, but we have been able to pull through all these things. So what it is suggesting is that Indian primary market performed well despite the global turmoil. All right. So the first point that is mentioned, that our primary market has been good enough despite the global turmoil. The number of firms opting to get listed on the stock market has also increased, and has increased by almost 40%. But the total amount raised declined to almost half of what was raised in the previous year. All right, so it is recognizing the positives and the negatives. The largest IPO ever in the history of India, this is something that probably you should remember, that the largest IPO ever in the history of India in the form of the LIC of India. ठीक है, जो initial public offering होती है किसी भी organization की, any company that comes up with any initial public offering, the largest one ever in the history of India has been put up by the LIC. All right. Then we talk about the secondary market. Now, what is the difference between the primary and the secondary market? Primary market is where a company, as soon as it is formed, it comes up with its share, it puts this share in the market. I'm hopeful that you people do understand the difference between the primary and the secondary market. So primary market is the place where when a company comes up, it will put up its shares in that market. It will try to raise whatever money it has to do, but that will be happening in the primary market. Secondary market is for those that are already present there. So it is an exchange between those who are existing there. So secondary market, both Sensex and Nifty 50 rose. All right. So this was there in the news also. Now, Sensex already has a few companies. Then Nifty also has a few companies. The base year differs for these two, but we have seen that the both have seen a positive increase in the last financial year. Another important thing that we need to remember is the volatility index. First, we need to understand what is the volatility index. The volatility index is based upon Nifty index option prices. As you can see in the box that is mentioned here, know the term. Here it is mentioned that it is based upon Nifty index option prices in which a volatility figure is calculated, which indicates the expected market volatility over the next 30 calendar days. All right, India uses the computation method for calculation with suitable amendments to adapt the Nifty option. Now, what it is actually telling us, you need to focus on the highlighted points. First of all, India volatility index. What is it based on? It is based upon the Nifty index option prices. You people should know what is an option, what is a future, etc. All right. So the volatility index is based upon understanding what is the Nifty index option price. And the kind of calculation that it does, it represents it in the form of a percentage. And this percentage represents the kind of a volatility that the Indian market has for the next 30 days, for the next almost a month, the kind of a volatility that the Indian market will show. Now, this volatility or the market volatility, why do we study the market? We study the market because the volatility of the market determines the kind of investment that will take place in the economy. That is why we have to keep a good eye on this. So what the economic survey is mentioning here is that India ka volatility index rose to an all-time high in the context of the Russia-Ukraine conflict, all-time high. Number of demat accounts opened rose sharply. Now, what are demat accounts? These are the accounts through which you trade in shares. Like, for example, today, if you join a job, then the company or the organization that you start working with, they will ask you to give your account details. Once you give them your account detail, they will also ask if you have a certain account through which you will be able to deal in shares. So that account through which is linked to your main account also, through which you will be dealing with the share, is known as a demat account. And the people who are, usually deal with the share market or on a daily basis, these are the people who have these accounts. And the significance that more and more demat accounts are being opened is that people are becoming much more active in the market. And therefore, it has been mentioned under the secondary market, the established market where the companies are already present there. All right. Then the next point is commodity prices saw a sharp correction. Then we'll understand this thing. All right. Then the next point is both the equity segment and the debt segment witnessed a net FPI outflow. All right. Equity segment and the debt segment FPI outflow. FPI, that is why we know that FPI is known as the hot flow. Now, government security secondary market training. This is something that you need to remember. Net sellers, foreign banks and primary dealers, net buyer. Like, who are the people who are involved? It is mentioning who are the net sellers, who are the net buyers. All right. So the sellers are foreign banks and primary dealers, and buyers are public sector bank, cooperative bank, etc. All right. So this was with respect to what is happening in the Indian economy with respect to how the banks are working, how the NBFCs are working, how the share market is working, etc. Another important thing that we need to look into is the presence or the development of something which we call as the gift city. All right. So let us look into the gift city, and then we will go back to this block, what they are talking about. Now, as far as the gift city is concerned, we see that it is an international financial service center. Gift city has been developed so that it becomes easier for us to have a footing in the global market. With respect to this, we saw that we developed a kind of an SEZ in Gujarat, and that is the gift city. Now, this gift city, it has entered into multilateral cooperative agreements with international organizations. ठीक है. Then also it has entered into bilateral cooperations such with places such as which are the hubs of business, for example Dubai, Qatar, Abu Dhabi, etc. So the gift city, you need to study a bit about this thing. You need to understand a little more about a gift city, because it has been specifically mentioned and a question can easily be asked about this. It is one of the, like when gift city started, there were hardly 2-3 offices there. There were hardly 20 employees there, but within a few years it has become one of the most gigantic SEZs in the world and the biggest in India. All right. Now, one thing that we need to look into is about the cryptocurrency. See, this is in this certain flags have been mentioned. You need to kind of keep these things in mind because words can be asked from these things. Actually, what this whole block is telling us is that cryptocurrency has to be recognized now. And since it has become a part of the economy and many countries are coming up with this idea that they need to have government-based currencies, etc. also. Therefore, we also need to recognize it and we also need to regulate it. So what it is trying to tell us is that simply many countries in the world, many different parts of the world have also been able to do that. And those are the ones that it is mentioning here. Like, for example, European Union, it has decided to focus on notifying and licensing the crypto assets and key entities. Japan, it mandates various criteria such as minimum capital requirement for cryptos. Switzerland, regulation by dividing cryptos in payment tokens, utility tokens and asset tokens. All right, 3 different types. Then United Kingdom, partial regulation in लोगों ने start किया है. Partial regulation with security tokens inside the regulatory purview and exchange tokens outside. All right. So these are just things that you need to, go through. The crypto asset market has been very volatile. These are the kind of things that you just need to understand. What can be asked about the cryptocurrency is that what it is. Cryptocurrency is quite a favorite topic when it comes to mains because you get to write a long answer. But also for prelims, it's quite important. So the things that you need to remember about it is the names of the different cryptocurrencies, which all country have come up with this idea that they will regularize it. What is the stand of RBI on it? Like, for example, RBI said probably now we should take it under our own purview so that we keep a good eye. And then why despite being in the open and not being under the control of the government, how things are still not under the control of the various criminals and the mafia. What are the various things in which these things have been controlled? For example, you will have to read about blockchains, etc. So you will study about this in science and technology, blockchain and cryptocurrency. All right. So the next thing with respect to economy is the insurance market. As far as insurance penetration in India is concerned, again, we are seeing that it has increased. The penetration has also increased. The density has also increased. Now, these two terms, it has mentioned it separately. This is something that one must use extensively in almost everything. Like, for example, tax payment. Like, for example, internet penetration. For example, telecom usage or any other new technology that comes up. These two things are there. The penetration of that technology and the density. What it indicates is that how far deep into the structure or the organization of the countries, the provinces has the service reached. All right. So what it tries to tell us is that how many people in the country, though both these terms are actually all right. The second is insurance density, refers to the ratio of the insurance premium to the population. Okay. Now, insurance penetration in the country has increased. The another important thing that we need to remember is that life insurance penetration in India, all markets are global. Life insurance, the point to remember is that most life insurance in India are saving linked. So what is the problem with this? The problem with this is that suddenly, like if somebody gets a life insurance and that person passes away, so our aim is to save money, but if the person passes away, then suddenly the family is not able to get the money. Or if a person meets up with an accident, it becomes difficult for the families to get the money. Like, for example, without mentioning the names of certain few private companies in our country, we have been focusing on giving insurances, health insurance, we are talking about car insurance, home insurance, all sorts of insurance. Like if we go to the other countries, we see that people have insured everything, like their houses, the electrical appliances in their houses, almost everything, because of the kind of awareness that those people have. In our country, we don't do that mostly. So what has been happening is that if there are certain people who become enlightened and who start doing all these things, like for example, if you get a car loan and then you get in the easiest possible manner, for example, you go online, etc. The terms and conditions are such that when you go to extract the money, if you get into that position where you require it, then many a times it happens that frauds are there. And even if there is no fraud, then the terms and conditions that were mentioned in such a vague manner that the person buying the policy was not able to understand. And in the end, you are left with no money, and that too despite giving the premiums over the years. So that is one problem that has emerged in the country when we started pushing for insurance penetration. But what has also been done simultaneously is that several disclaimers, as well as several methods of informing the people about these frauds and about studying and understanding the various documents carefully that we need to study. These are the kind of things that are also being told to the people, and hence awareness is one of the life insurance survey is talking about. In general, insurance is increasing. This actually also indicates that the social sector is also becoming much more better, because somewhere our awareness and our education plays a great role in this. Also, as more and more people become a part of the organized sector, more insurance penetration will happen. All right. So it is a good indication of the development of the economy. The third point that we have is that insurance density in India has increased. And then the amount is mentioned from $11.1 to $91 in 2021. The life insurance premium registered growth of 10.2. And then India is expected to be in the top 6 countries in insurance market by 2032. All right. Now, what is this indicating? This is indicating that quickly we are moving towards a system wherein more organized labor will be there. Because right now, if you look into the economy of the country, we will see that as such, approximately more than 90%, even 92% of the people are still in the unorganized sector. But we are trying to improve that. And in fact, we are trying to organize our unorganized sector. And that is time and again we come up with certain policies. Like for example, we keep telling we keep telling the states also, certain states have also done it, that we want to reduce the labor laws, and those laws that are present there, we want to modify them. We want to modify them in such a manner that there are lesser labor laws, and the rights of the labor is also these people are made aware of that. This way we will be able to convert our economy into more of an organized economy. And hence insurance will increase, then pension will also increase. Now, when we talk about the pension sector, we are seeing that India's pension sector has also expanded since the introduction of the National Pension Scheme, as well as the Atal Pension Yojana. Coverage of the population in pension. Now, as soon as you read the names of any of the schemes in the economic survey, you must always make a note of it. You make a list of these names. These are the schemes that you should primarily expect in your prelim exams. So if a certain scheme has been mentioned in the survey, that means it is one that is doing quite well. So like for example, here we have 4 names given in the box: the Ayushman Bharat, Pradhan Mantri, Suraksha Bima, etc. All these 4, you must know exactly why there are. Here in the economic survey, they are mentioning their achievement. You should go through it. You should know, okay, this is doing well. But what you need to know is the basics of these schemes, the ministry that they're associated with, and what all these schemes entail. Because if a scheme has been mentioned in the economic survey, out of those 300 schemes that you people have to study, or that you people study ministry wise for the prelim, these are the most significant. And in fact, in the worst case scenario, like if a student is going completely unprepared, then these schemes should make that list that you thoroughly go through. All right. Then coverage of the population, the pension has also risen. Pension Fund Regulatory Development Authority, under the aegis of the Financial Stability and Development Council, has taken several steps to enable the consumer to make informed decision and reap the benefit of the formal financial sector. All right. So three things it has mentioned here. It has mentioned NPS, it has mentioned APY, it has mentioned PFRDA. All right. Now, so first of all, we will look at the kind of a conclusion that it has made for this chapter. The one thing that we need to remember that high inflation was at the global level. All major economies adopted the monetary tightening. Since that was the thing that was happening on a world scale, we also tried doing that. We reacted by raising the repo rate by 225 BPS. Lending and deposit in the market increased, and the trading volume and government security reached a 2-year high. Banking sector performed well, NBFC performed well, country witnessed the largest IPO ever. Naam humne yaad rakha, LIC. India remains one of the fastest growing insurance market. Number of the pension subscriber has multiplied over threefold between 18 to 22. So the gist of this chapter is simply that the first thing that you people need to do is first of all understand the basics of the monetary market hota hai. You need to know certain basic terms such as CPI, such as WPI. Now, what is CPI and what is WPI? We will get to it in the next chapter also. That is why I have not focused much right now, because this chapter already had a lot to talk about. But the difference between the two is that WPI looks into the inflation at the, when the wholesaler tries to give off the products, and CPI looks into the inflation at the retail price when the consumers are there to buy the product. So there is a difference inherently. The second difference between the two is the difference in the base year. The third difference between the two is that that it gives to the different components that it is looking into. Like, for example, when we look at WPI, the 3 to 4 parameters that make WPI are different from those that make the CPI. All right, because in CPI, we are even looking into, we are trying to look into the services that are provided as well. All right. Now, these two are different from the, when we talk about the core inflation. So these are a few things that you need to know. Then there is another term that you need, that is inflation. So thing to keep in mind. Second thing that you need to keep in mind is about the capital market. You need to know a bit about the share market. You need to know a bit about the terms such as what is an option, what is a future, what is the difference between the two, what is a call rate, what is a buyback rate. Now, along with that, you need to know the repo, reverse repo, SDEF, most definitely SDF, because this is a new thing that has been introduced. So I would tell that repo rate, reverse repo, MSF, and SDF, these four things you should be extremely clear with. All right. So these are few static based things that you need to understand. Along with that, then you need to know these trends with respect to these terms. You need to remember the trends. What has increased, what has decreased. All right. Then based on these, you should understand if there has been something that has been steadily changing, because normally in an economy, nothing changes steadily. So when you get an objective in the prelim where it is mentioned that, like for example, in the last 5 years, we have been steadily, the growth has been increasing, or steadily the growth has been decreasing. So that term in itself tells us that we will eliminate this option. All right. But if there is some change that has been happening steadily, so you need to remember that. Otherwise, normally in an economy, nothing happens steadily. So those are the kind of things that you need to pick. How you will pick it? You will pick it after studying this, after doing your economy static portion. You should do the previous year questions. So you will be able to easily figure out. And with respect to the economic survey, you will be easily able to find out those basic areas from where the questions will be asked. All right. The next chapter that we have is prices and inflation, successful tightrope walking. Now, this is kind of, we took a lot of time for the fourth chapter, because the fourth chapter in essence is what you actually need to take away mainly from this economic survey, because that has talked about almost all those things that an economy has, the monetary system of a country has. This is again an extension of that same discussion. What it is telling us, the year 2022 was marked by the return of high inflation in the major economies after a few decades. As you can see, same repetition. What we need to understand is that at a point in time, India's retail inflation rate peaked at 7.8% in April 2022. What we will understand is that there have been 3 different phases of inflation in our economy. That is something that we need to see, and how the WPI and the CPI, why they were divergent earlier and how they converged later on. Now, here in this graph that has been shown here, you will see that the two, in 2021-22, what we are seeing that WPI is going in its own direction and CPI is going in its own direction. And then in 2022-23, we see that slowly they are coming closer together. All right. So this is what we are talking about in this chapter. The simple thing, world scenario, if you look into the world, we have already been talking about, marred by 2 things. COVID was there, Russia, Ukraine is there. We have been studying about this. Because of this, agricultural produce has been impacted and the supply of food has been impacted. That is why we saw that Turkey brokered an agreement so that the ship will be able to pass through the Black Sea. All those things you must have read in the current affairs. All right. So as far as the CPI inflation is concerned, we call it the retail inflation. Why do we call it the retail inflation? Because the calculation is made at the retail of the product. Now, what the economic survey is telling us is that it went through 3 phases. It peaked at 7.8. Then there was a phase where it was held at 7.0. And then finally, it started declining to 5.7 by the end of the year. Only. Okay. After that, what we see is that this inflation, this CPI inflation was mainly driven by higher food inflation. All right. While the core inflation stayed at a moderate level. Now, what is core inflation? Core inflation is that inflation in which we do not consider the food and the fuel prices. All right. So if we neglect the fuel and the food, we see that the kind of inflation that the country was seeing, that it was at a moderate level. But when we start including those two, we see that there were 3 phases of inflation. What does that tell us? That it was the food and the fuel that was manipulating the greatest impact. We'll come to this part. Here we see food and beverages. Food and beverages, the inflation is showing this. Is showing a complete increase. Then we have fuel and light. Again, it is higher. Therefore, what we get to see is that as far as the CPI or the retail inflation is concerned, we see that there was a high food inflation, there was a high fuel inflation. Why this is being mentioned again and again? Because later on we'll see that we targeted these two only to reduce the inflation. All right. The second point that it is writing is that higher food inflation estimate using consumer price, food price index, food inflation climbed to 7.0 in the year. ठीक है, पहले क्या, it was earlier in financial year 2022, it was 3.8%. In financial year 2023, it became 7.0%. All right, therefore, there is a rise. Then the third point is telling us it is that there is a rising edible oil price. All right, the international price pressure directly affected the edible oil prices worldwide. This is some there in the news also. So probably you people must have come to know about this thing. One thing that we need to remember in India is that we are a dry, hot country. All right. Therefore, as such, we tend to believe and we tend to understand that probably we people should have a good production of seeds. Because there would be a good production of seeds, we also like to believe that we will be able to produce much more oil. And therefore, we have several schemes that are related to the production of oil. But what actually happens is that we are one of the largest importers of oil. In fact, with this respect, we have been talking about other seeds also that produce certain oils that are even non-edible, but we have not been able to reach there as yet. But probably you people must have read about the various schemes that are related to the production of the seed and how we are trying to improve our capacity to produce oil from them. If you people must have read, approximately 40% of our land is absolutely suitable for growing seeds that can easily for us ourselves. India means 60% of its edible oil demands through imports. Measures to contain inflation is in the essential food commodities. Now we have done what we have realized till now is that because of the fuel, because of the food, our inflation was high. So certain things had to be done. Therefore, what are the major areas? First major area that we can think of are the cereals. The second is that of the pulses. Then we have the edible oil. We have already been talking about the edible oils. First, let us look into that. The basic duty on refined oil and crude palm oil was reduced. Duty on this was reduced to curtail any unfair practices like hoarding, black marketing, etc. All right. whenever something, whenever we see that there is something that is, required by the people, there is a high demand of something, people start hoarding it. Like, for example, every year we see onion prices go high. So that just keeps happening because onion is kind of an integral part of the diet in India for most of the people. So because of that, we see that people start hoarding it for black marketing that. So something like that has to be controlled. For that, we need to keep the price up to certain level so that these people are discouraged. Hoarding is of no help. That is why we see that the basic duty on palm oil and crude palm oil was reduced. The second thing is that stock limits were also suggested. Then for the pulses, again, we are one of the largest importers of pulses, despite the fact that we are one of the biggest producers of pulses also. We see that a buffer stock of pulses has been maintained for price stabilization. All right. The third thing is that as far as the cereals is concerned, we know that wheat flour exports, they were regulated. We even banned the export of our wheat to a few countries. So along with wheat, even maida and suji, we concentrated on that also. The government also imposed an export duty of 20% on rice, brown rice, semi-milled, etc. So why? Because so that, lesser export will happen and more will be available for the people in the country, and then the inflation will reduce. These are very simple things to understand. Now, the other important thing that it has highlighted, which you must remember in the form of a trend, is that higher rural inflation than urban inflation was seen in majority of the states. All right. Then the second thing that you need to remember is that rural fuel inflation remained lower than the urban counterpart throughout the current fiscal year. So one is most important point is that rural inflation more than the urban inflation. That is one trend that you need to remember, as has been shown here. All right. Domestic wholesale price inflation. Now WPI. What is WPI? We already mentioned that when the food is supplied to, or not just food, the products are supplied by the wholesaler. Wholesaler, the one who is selling the products at prices that are lower. So when these people supply the food, the kind of inflation that is happening there is the wholesale price inflation. Two things that you need to remember is that wholesale price, like WPI and CPI, these are two of the favorite topics of UPSC. So every year, there is a chance that inflation-based question will be asked, and these two will be mentioned. So you need to know which is the ministry that is concerned with it, who is the person who is responsible for coming up with these two, and the entities that are a part of it. All right. Now, items exposed to international markets. Items exposed to international markets saw a price rise, like petroleum products, basic metal, chemicals, and chemical products, edible oil. We will get back to this point, because then we went to reduce their consumption also. Regulatory action reduced the WPI from its peak of 16.6 to 5 by the end of the year. What are we saying? 5 for this, for the CPI also. All right. Now, wholesale price index, the index numbers used to measure the changes in the overall price of the goods before they are sold at retail price constitute the WPI. So that is the definition of WPI. This inflation problem with our is that even if we try to control our inflation, the problem is that most of the things that we are producing, even if we try to increase their export, so that if as such, our understanding is that if we increase the export of a certain thing, then we'll be able to earn money. And once we'll be able to earn money, therefore we will be able to improve the conditions of our economy. But the problem with our economy is that we people have to import most of our material into products that have to be sold out. So this is one of the basic problems that has been there in our economy since since the inception of the practice of analyzing our economic state. So the measures to contain inflation in input prices has been, first of all, reduction of the import duty. Import duty was reduced for the raw materials. All right. Then excise duty on the fuel. The government has also reduced the excise duty on petrol and diesel so that the fuel prices remain low. Reduction of the custom duty. Custom duty was reduced for the key items like cotton, then diamonds, etc., because these are one of the major imports for our country, despite we ourselves being one of the primary producers of these. All right. Then we also talk about these are like the few basic things that have been done in our economy over time. What has happened is that we have already been talking about the convergence of the WPI and the CPI. All right. So what is happening here is that you might see here that by the end of 2022, October, November, December, we see that certain convergence started coming in. This convergence has started coming in because certain changes have been made in the basket that we have been importing and the kind of economic plans that we have had. This has been mentioned here. For example, the convergence phase. The convergence between the WPI and the CPI indices was mainly driven by two. Is that first of all, there was a cooling in the inflation of the commodities. For example, crude oil, iron, aluminium, cotton led to a lower WPI. What is happening as such? We, in general, we decreased our, import. The second thing that we did was also that there was a reduction in the amount that we were paying for these things. All right. The second point is that the CPI inflation rose due to an increase in the price of the services. Falling inflationary expectation. Now, the second thing that we need to understand here is that inflationary expectations are decisive in charting the course of inflation regulation. RBI's anchoring of inflation expectation has helped to guide the trajectory of the inflation in the country. This is what we have been talking about through. Now, what we are trying to tell here is that the RBI has been trying to reduce the inflation. We have already been talking about it in the last chapter. The second thing is the trend, which is more important for our understanding. The current 1 year ahead inflationary expectation by businesses have shown a decreasing trend. Similarly, household inflation expectation too have moderated. So these are like basic trends that you people need to keep in mind with respect to the whole concept of inflation. Can you people please hold on for a second? All right. Now, after that, we also talk about the monetary policy measures for price stability. Now, two words then again that you people have to remember is, first of all, there is a monetary policy and then there is a fiscal policy. Now, as far as the monetary policy is concerned, it is framed by the RBI. A certain committee was made that is known as the Monetary Policy Committee, and it is the one that is responsible for maintaining the sanity of the monetary domain of our country. So RBI's Monetary Policy Committee increased the policy repo rate under the liquidity adjustment basis point, the same point that we studied in the 4th chapter as well. So what has the RBI want to reduce the inflation? That the inflation was caused because of the presence of the high prices of food, high prices of fuel. RBI decided that it will reduce those inflationary pressures. For that, it came up with a certain process. That process is known as monetary tightening. It decided that it should tighten the economy. It should follow the dear money policy. For doing that, what did it do? It came up with a new mechanism that we studied, the SDF. And in order to do that, it also came up with newer rates, newer policy rates. One of the rate that has been continuously mentioned here is the repo rate that was increased from 4% to 6.25%, hence making the loans much more costlier, hence reducing the liquidity in the market, hence reducing the inflation. So this is the basic thing that we have understood from the last chapter. All right. So the next thing that we must keep in mind is the current inflation difference from 1970s. Now, this is one topic that you need to understand. Probably you people must have read about stagflation. Now, when we talk about stagflation, we mostly mention the 1970s. The term stagflation actually indicates a situation wherein the growth of the country or the growth of the economy is not good, but simultaneously the inflation in the economy is quite high. So because of that, you fall in a situation wherein you are not able to understand whether you allow the country to grow or you prevent the inflation. So this is the kind of a trade-off that had come in front of us in this time also. And that is why we saw in the previous chapter, we used the term hawkish system or hawkish mechanism of controlling inflation, wherein we completely forget growth and we start concentrating on controlling the inflation. Why do we do that? Because we are in a fix. how we can improve the growth as well as inflation. And then when we have to choose the lesser evil to concentrate on, we start concentrating on reducing the inflation so as to, prevent big losses in the economy. Now, what the economic survey is telling us that in 1970s, it seems like we were in a stagflation. Again, today we can say that we are in a similar situation, but the economic survey is telling us that the situations are not similar. It is different. How it is different is something that is trying to explain to us. Actually, in 1970s, what happened was that there were a few countries that decided that we will things of those political crisis that were happening in the country and happening in the whole world, and the kind of policy that this group of countries came up with, in which they would manipulate the price of the oil, etc. Things went into a crisis, and a new problem came up, which is known as the oil crisis of the 1970s. Because of that oil crisis, we saw that in our country also we had some impact. And it is mostly this example that we use to understand stagflation, the system of stagflation. But at that time, what we need to remember is that it was because of the supply issue. The kind of a problem that was existing in our country or in our economy at that time was mainly because of the supply side issues. But today, this is not the circumstance. And therefore, certain points have been mentioned by the economic survey here. First thing is the recent oil price rise are proportionally smaller than the 1970s crisis level. The first thing is that it is different from the 1970s level. Why? Because the price rise is not as high as it used to be back then. Second thing, recent crisis has seen price increases across a broader range of commodities like agriculture, products and fertilizers, metals. And in 1970, it was only oil. Commodity supply disruption have played a smaller role in recent crisis. Current global inflation has started after several years of low inflation. The central banks have much clearer idea. This is simply actually telling us that at that point of time, it was a new shock to the world. It was difficult for the world to handle it. They did not understand how they need to get out of it. But now people are having things under control because we have already had experience of that. All right. So the next thing, so this was with respect to how it is different from what in 1970s. It is not 1970s anymore. So that is what it's trying to tell us. The next thing that the survey has talked about is about the housing prices. As I already mentioned, housing prices actually tells us about the health of the economy. So if people are able to buy houses or rent out houses and the kind of prices that is there in the market, it tells a lot about the economy, and therefore we keep a tab on this thing. All right. Two kind of things are there. First of all, we have the house market price, and then we have the assessment price. You can read it in the know the terms section. What is the market price? Price at which the property would sell for an open market. What is the assessed price? Assessed price is the value assigned to a house or the other piece of real estate for property tax purposes. All right. So these are the two ways in which we analyze the price of the various houses. All right. So the two kind of indices that we have, first of all, is the HPI assessment price, SPI market price. All right, that has been calculated with financial year 18 as the base year, and a composite index is calculated for 50 cities across India. Based on this calculation, we have had a few, we noted down a few things. The first thing that we came up is that there is an overall growth in the housing price index market price. Market price has kind of shows saw in 3 cities out of the 50 that we analyzed. Then again, assessment prices also overall growth past 2 fiscal years shows out of 50 cities, 46 cities registered an increase. What is it showing? That the market is going up. All right, as simple as that. Now, after the housing sector, the next sector that is under consideration is the pharmaceutical sector. Now, why are we talking about the pharmaceutical sector? India is one of the major economies when it comes to the pharmaceutical sectors. The best thing about India is that it has come up as one of those countries that is providing medicinal help to the developing world. See, because of this factor, because of the capability of being able to provide to the developing world, we people have been able to garner a definite place for ourselves in the world pharmaceutical market. The second significance is that our country is one where out-of-pocket expenditure on medicine is quite high. Because of this reason, we need to have a good system of control pharmaceuticals. The third important thing is that pharmaceutical industry is one of the major contributors to our economy. The fourth important factor is that our population is quite large. The fifth important factor because of which it is so is because in our country, the sale of the pharmaceutical product is not as regulated, and therefore there is an endeavor from our side to do so. Now, what we keep seeing here is that, first of all, we talk about the regulation. The first thing that you need to know is a national pharmaceutical pricing policy is there that came up in the year 2012. It was administered by a Department of Pharmaceutical. It gives us the basic principle for the regulation of the prices of the drug. Price ceiling and fixed price administers the ceiling price of almost 119 formulation. The number is not that important. But what you need to know is that there is a national list of essential medicine, all right, whose prices are fixed. Actually, this list has a few medicines that are mentioned, so that because we know that these are the ones that are frequently required by the people, and therefore they are sold in the market. Therefore, we need to keep a tab on these. All right. Other than that, we also need to know about the Drugs Price Control Order 2013. This is the one that we are using for the medicines as well as for the cosmetics also. So why do we have these? We have these so that we can keep a track of the retail prices of the medicines, because, you know, out-of-pocket expenditure issue. Then, to counter the health issue, the government has come up with Ayushman Bharat. We also see the concept of Jan Audhari the government has come up with. So that is one area that you people should know much more about, because that is one of those been introduced to change the scenario in the country. The whole health scenario in the country will get changed. That is what is expected of these schemes. The other thing that is mentioned here is Pradhan Mantri Bharatiya Jan Aushadhi Pariyojana, as I was mentioning here. In this, we have the Jan Aushadhi Kendra, which are open to provide quality generic medicine. Now, what is a generic medicine? Generic, the word, when we use the word generic medicine in terms of pharmaceutical, these are the medicines which we concentrate on the salt, the kind of component of the medicine. So, the same medicine can be made by two companies. One might sell it at a higher price and the other one might sell it at a lower price. But the significance of the medicine is in the active ingredient which is there in the medicine. So generic medicine actually concentrates on that the salt or that the active ingredient in the medicine needs to be delivered to the people and at the best possible price. Therefore, we have the Jan Aushadhi Kendra. More than 9,000 Jan Aushadhi Kendra have been opened. This is an indication of the kind of development that we are trying to bring about the health sector. So the simple conclusion is that we are doing quite well. Unlike the advanced economies, we have been like them. We also went into that phase of high inflation, but we have also been tightening our economy, and we've been doing well in that area. Now, chapter at a glance. The first thing that we need to remember that when our inflation peaked, it peaked to 7.8. The food inflation was higher, played a major role. Diverging WPI CPI rates. Earlier they were divergent, later on they converged. Housing price index showed favorable trend. Price of various drugs and medicines are kept under control through the National Pharmaceutical Pricing Policy 2012 and establishment of the Jan Aushadhi Kendra. All right, so this is the basic conclusion. What you need to remember, again, I would tell you that you need to remember the trends. You need to remember the reason for the WPI and the CPI divergence and the convergence. And you need to know what WPI and CPI, these two terms are. All right. The third chapter that we have under consideration today is the social infrastructure and employment. Now, this is one sector, social infrastructure, that has been a cause of concern for our country. Because our country, as we have been mentioning time and again, now has the largest population in the world. A majority of this population lives in the villages. A majority of these population that lives in the villages is comprised of females. A large part of them are elderly female. A large part of widows and widowers are there. Then we have one of the largest section of youngsters in our country. We have one of the largest sections of uneducated people in our country. We have one of the highest load of diseases such as diabetes, such as tuberculosis in our country. So our country is grappling with all sorts of health-related, education-related, disability-related problems. And therefore, the social infrastructure, the building of social infrastructure is extremely necessary for our country. All right. In this section, what we get to see is that there are certain areas where the country has tried to focus on, so that we will. Now, it is hardly something that you people do not already know, because this chapter mainly talks about the health sector and the education sector. There are a few certain points that I will highlight, but in this chapter, what I would want you people to do is to, again, remember the trends, and secondly, all the schemes and all the programs that are mentioned in this chapter, you make a list of it and you read those from wherever you are reading your schemes from. All right. Because one question will be asked definitely from this chapter. So most of our policies have been targeted at making people educationally sound, financially sound, and providing them health services. All right, we'll get to see all these things. Now, first thing that comes to our eyes when we look at this chapter is Sabka Saath and Sabka Vikas. This is one phrase that has been the sine qua non of our recent mode of development. We want all sections of the society, irrespective of whatever kind of differences based upon gender, region, etc. We want all of them to end. We want everyone to develop. So that is what we are concentrating on. The second thing that we come across is that it has been targeting the human capital formation, education, and health. Now, we will start with the social sector expenditure, keeping pace with the growing importance of the sector. All right. The first thing that we come across is that there has been an increased share of expenditure on health in the total expenditure on social services. We see that in the financial year 23, 26%. All right. Earlier, it used to be 21% in financial year 19. Now it is 26% in financial year 23. Health expenditure stands at 2.1% of the GDP. All right. Very simple data that you can just easily keep in your mind. Now, this will simply keep on telling you how the things are improving. Even though we are seeing that in financial year 22, it was 2.2, but things are becoming better. COVID is also quite much under control. Earlier, we suddenly had to spend a lot of money because of COVID. You people must have read about, there is one thing that you people should read about, like keep a good understanding of it. In the health sector, we saw that we tried to develop a system of producing oxygen in the hospitals. That is the pressure adsorbent material. High pressure, low pressure equation was used, and an adsorbent material is used such that oxygen is produced. I'll be telling you about it also. So what the government was trying to do, that when COVID came up, we should remember that the first problem that came up was that of oxygen. So what the government decided, that we should develop a scheme wherein every hospital should have a mechanism of producing its own oxygen. So for that, we developed a mechanism. The mechanism is simple, that the air that we have, we will pressurize it, we will give it high pressure, then we will put it in a column. In that column, we will have an adsorbent. That adsorbent will absorb the required gas, in our case, oxygen. The adsorbent will be one that will be compatible with oxygen. It will get adsorbed, and then slowly the pressure will be released in such a manner such that other gases will get separated. This one will get separated. And then this gas will be, taken towards the hospital. All right. So that is one mechanism that you should just keep in mind. Maybe somewhere you will be able to, even though that is something that you can, that will be more helpful when it comes to mains, but still as such. Okay. So the next important point that we can refer to is the National Health Policy 2017. National Health Policy 2017 told us that we should increase our share to 2.5% of the GDP. What we have done is that 2.1% of the GDP. Second point is, we know that UNDP come up with the HDI report, HDI Human Development Index. In this Human Development Index, we people are at the position 132 out of 191. All right. India's Gender Inequality Index rank is 122. All right. So these are few things that you might keep in your mind, so that you can use it somewhere. But with respect to indexes, I would tell you the most important thing is the name of the index and which organization comes up with that index. That is it. All right. The second thing is 16.4% of India's population is multidimensionally poor. That is something that you should remember. 16.4% of our is multidimensionally poor, and an additional 18.7% of people are classified as vulnerable to multidimensional poverty. This is extremely difficult for us because if in the health sector we get to see that every year many people fall from the middle class to the BPL section. Why? Because of the out-of-pocket expenditure. These are the kind of problems that our people are facing, and that is why the government is so determined to make things better for the people. And that is why we see so many schemes and so many programs coming up every day, because our people easily, they cross that line and they fall deeper into the poverty. All right. Then the next thing that they have mentioned is the transformation of the aspirational district program. Now one should remember that the aspirational district program has been one of the most successful programs of our country. 117 districts were selected, and then we decided that what all sectors we need to concentrate on. We gave them different weightage. We took up their health issues and their educational issues, etc. We gave them different weightages so that we will be tackling all those things. Several things have been done for these aspirational districts. Many have been performing extremely well. It is such a successful program that the Prime Minister himself decided and announced that we should continue this program at the block level also. Therefore, I have marked here aspirational blocks program. This is in line with the aspirational district program. The second program that you must read about is Mission Utkarsh. Again, this is something that has come up because of the success of the aspirational district program. Health, nutrition, financial inclusion, and governance. These are the sectors that have been health and nutrition, financial inclusion, governance. These are the sections that have been taken up under these aspirations so that we will be able to improve them with different weightage given to them. Now, progressing labor reform measures, another thing. Labor reform has been one of the primary sector of concern for our economy. Why? Because there were extremely large number of codes, and because of that, a uniformity could not be established. Therefore, the government has been trying to reduce the number of the labor codes to as less as possible so that things become much more easier for the labor market. All right. Another thing that you should remember is that there is a portal which is known as the eShram portal, which helps in creating a national database of unorganized workers. As I mentioned earlier, the number of the unorganized workers is extremely high in our country, more than 90%, and therefore it is quite a must for us. All right. Over 28.5 crore unorganized workers have been registered in the eShram portal with major enrollment from the agriculture, domestic, and construction workers. All right. Construction workers form a good section of our unorganized sector because like a large chunk of the unorganized sector is concentrated in the construction work. So this is something that you can keep in mind. All right. Then after this, they have mentioned about the Aadhaar. In this whole, Aadhaar acts as the essential tool for social delivery by the state. One thing that you need to remember is that certain schemes and certain DBT schemes are notified under Section 7 of the Aadhaar Act. This is a prelim based point. Section 7, you can remember, you can keep this thing in mind. All right. Key usage of Aadhaar. These are certain things that you should, just keep there in your mind. And these are the schemes that you should study about, as I was mentioning earlier. Like, for example, JAM Trinity, one should know Kisan Samman Nidhi, like 6,000 rupees, how it will be given, in how many parts, what will be done, etc. Aadhaar, obviously, CoWIN is another kind of an app that we have made, how it has made things easier for the, in general, for the government to keep a track of the patient, to keep a track of what services are being provided to them. Then face authentication. Face authentication has been something that has been in the news, and all the pros and cons must be there, easily understood, because face authentication, on one side, it will help us keeping a track of the whole population. But if it is a good practice to keep a track of every individual, is something that is being questioned every now and then. All right. So these are the kind of things that you need to study about these. Then improving employment trend. Simply, the supply side of labor is studied through the periodic labor force survey. This is something that you need to remember. The supply side of labor studied through periodic labor force survey conducted by the Ministry of Statistics and Program Implementation. Demand side of labor studied by the annual survey of industries by the Ministry of, again, Statistics and Program Implementation. All right. And then quarterly by the Labor Bureau. All right. So these are 2 points that you might remember. Supply side of employment ke baare mein we will see what all is happening here. Labor markets have recovered beyond pre-COVID levels. Improvement in the employment indicator, the labor force participation rate, worker population ratio, unemployment rate have all improved for both the males and females in both the rural and the urban areas. All right. The first thing that we should keep in mind. The second thing that we will talk about is the demand side of employment. There is a steady upward trend in employment in the organized manufacturing sector. All right. Abhi tak hamara problem is unorganized sector has a lot of people. Now we are seeing that there is an improvement in the organized manufacturing sector. In this organized manufacturing sector, what we are seeing is that the food product industry, 11.1% employment it is providing. Okay, so the largest employer is the food product industry. Then it is followed by apparel and basic metal. All right. Then state-wise, Tamil Nadu had the largest number of the people engaged in factories, followed by Gujarat and Maharashtra. All right, in factories. This is something that you might remember. Tamil Nadu had the largest, then we have Gujarat, then we have Maharashtra. Then more than 60% factories were found to employ less than 50 employees. Now, this is a problem. Why do companies do this? Because as soon as you cross a certain number of employees, like for example, if you have 100 employees, you will have to give them certain amenities. Amenities that may include amenities such as insurance, such as life coverage, etc. So because of that, what the companies are trying to do is they keep the number of people employed with them quite less, so that they do not fall in the purview of the various labor laws that are present there. All right. So that is kind of a tactic the other factories are following. And therefore, because of this, most of them remain in that sector wherein they are smaller in scale. And that is why we see that many of the policies have been coming up for the small scale industries. And we have a large number of small scale industries. Even though there are positives and negatives to everything, small scale industries are a good employment generator also. So you will have to read about this in terms of the positives and the negatives for the mains exam. But this is something that you can remember. All right. Number of person demanding work under NREGA has been stabilizing. The number of works done under NREGA also steadily increased over the years. Therefore, NREGA is acting as a good provider of employment to the people in the country, because majority of the population do live in the rural areas. All right. Then the trend in the rural wages, nominal rural wages have increased at a steady positive rate. All right. Non-agricultural sector, the growth of the nominal wage was lower. The current growth in the real rural wage has been negative due to elevated inflation. All right. So what is, as such, it appears that everything is good. But the problem is that inflation was there. Therefore, certain kind of problem must have been, in the rural wages also. Because effectively, what is seen on the papers is one number. But what effectively happened is another number. So that effectively what is happening is that the rural wages, the growth has been negative because of the high inflation. All right. Then, so the other points that we need to take care of is the survey is also mentioning about the National Career Service Project. It is simply one platform that has been designed so that the employer and the employee gap can be reduced, so that career-related services can be provided. All right. 2.8 crore job seekers, 6.8 lakh employers have registered on NCS portal. Therefore, it is providing a bridge where they can connect with each other. All right. This NCS has also partnered with Digi Saksham program. All right. Now, what is Digi Saksham? It provides training program to the students. All right. So because of that, we see that as such in our country, see, the problem is that not everyone is educated. And the people whom we claim who are literate, despite being literate, even if we consider that they are literate enough, but the jobs are not, available to them. So what is happening is that the government has been constantly telling us that do not find job in only one or the other sector. Try to expand these sectors, and government is providing support in every sector. So while it is doing that, what is happening is that it is trying to promote the vocational work also. It is trying to promote the people who want to work in the private sector also. It is trying to help the people who want to work in the government sector also. So several schemes have come up. This is one step towards that. The NCS portal has been successfully interlinked with eShram, Udyam, and Skill India portal. All right. It has recently also added international job module. Okay. Now, one thing that we will study here is the labor force participation rate has seen that there are less females in that. Now, why is that? Major issues in the female labor participation rate. The common narrative of Indian women is that labor force participation rate actually misses the reality of the working females in India. Actually, what is the problem in our country is that women are working 24/7. Women are doing domestic work, but it is not something that is just limited to our country. It is in every country. The work that the women do, it is not easily quantified, because when we talk of work, we talk in terms of the number of hours that you invest in the office. It is a very basic and a very simple understanding. Since a few years, we have been talking about this thing, that the domestic work must also be counted, though it is unpaid, but it is work and it is 24/7. Therefore, as per the latest ILO standards, you may look at the third point, limiting productive work to labor force participation is narrow and only measures work as a market product, as it does not include the value of women's unpaid domestic work, which can be seen as expenditure saving work. All right. Now, in India, problem, we are not following the kind of recommendation that the ILO gave us. ILO has told us that when we measure the work, the work of an individual, we should look into all different types of ways of measuring work. But what we are doing is that we are looking at only one or few dimensions. All right. And secondly, also, when we make categories for work, we make those categories into certain broad clusters. Like, for example, one of the example that is given here also is that we club the productive work like collection of firewood, poultry, farming, etc. into one domestic work, because of which the calculation is not correct. All right. So that was with respect to why the work of women is mostly neglected. Then the second thing is the role of SHGs in women empowerment. SHGs have been extremely helpful. The role of SHG has been such that people who were not, a part of the economy, or who are still not a part of the organized economy, they have also been able to make use of the financial institutions. And once any person comes into the financial domain via the banking sector, then that person becomes an active player in the economy, even if they were actively participating in the economy, but they were not being recorded. But once a person has an account, once a person is dealing financially through a banking mechanism, that person becomes an integral part of the economy, and that person can be easily counted when we go into studying our economy. And these self-help groups have been immensely helpful. The SHGs, in fact, one should remember that they have been much more helpful in few states, especially in the southern part of the country. They've been extremely helpful. What has happened is that they have also emancipated females of the kind of limitations that they used to have. Because even if, the people were becoming educated and people were doing things, the kind of work that women were doing, that was still not being recorded. And the women were also, they could not easily become a part of the commerce or the economy of the country. So SHG has actually helped in that. Now, all those points are mentioned here also. SHG movement is based on the principle of group solidarity and microfinance. So why are we talking about SHGs? Because SHGs, they are the mechanism through which microfinance is being done. All right. So small amounts of loans are taken by these self-help group. They keep a track of each other. They keep reminding each other that, dude, we have to return the money that we have taken. Then, since these people are in groups, therefore they work also. They maintain a kind of a peer pressure. And then the kind of work that they take up, they have been able to successfully make those things into a good business or whatever they are doing. And then once things go good for them, then they are also able to return the money. And one of the basic problems in our country has always been that the people used to take loans and then they would not return. So that is something that we have been able to handle through the system of microfinance via the SHGs. Now, the SHG bank linkage program was started in 1992, has blossomed into world's largest microfinance project. All right. It is not one of the largest, into the world's largest microfinance project it is writing. All right. SHG must practice the Panch Sutra. Now, these Panch Sutra you should keep in mind. That is regular meeting, regular saving, regular interloaning, timely repayment, up-to-date books of account to avail loans from the bank. All right. The role played by SHGs for women empowerment is that 67 lakh SHGs have received collateral-free loans of 1.5. The number you don't have to remember. This is just to keep an idea that this has really done quite good for the people in the country. All right. India has around 1.2 crore SHG, of which 88% are all women. You people can see exactly how it has, helped females. Now, there are certain names that you might remember. You should keep in mind normally these which are at the state level are not asked as such, but you should keep them in your mind. Like for example, Kadamshri in Kerala, Jivika in Bihar, Mahila Arthik Vikas, looms in Ladakh, etc. All right, certain other have been mentioned here. Patrakar Diris of Jharkhand, Prerna Canteen in Uttar Pradesh, etc. All right. So this is that. Then other than that, so this was the basic things that we were reading about the medical sector, etc. The other sector that we are talking about is the higher education. Now, one thing that we need to remember is that we have come up with a new education policy. So that is something very important for not just for your prelim, but also for your mains, and not just for this year, even in the coming years, it will remain extremely important because changes will be happening. The new education policy brought about the changes in two different domains: for the primary, for the school going children, and the changes that have been brought up for the students who will be in the college and the universities. So what is happening here is that first of all, we have increased the number of the medical colleges, we have increased the number of the IITs, the engineering colleges, the MBA colleges, the medical colleges, everything has increased. We have increased the number of the universities. We have seen that there has been an increase in the gross enrollment ratio in the higher education from 25 to 27%. The second thing that has been happening in the country is that we are equipping the workforce with employable skills and knowledge in mission mode. Now, the Ministry of Skill Development and Entrepreneurship was created in 2014 and Skill India Mission was launched in 2015. So this is something that you need to keep in mind. With respect to this, certain things are there. For example, you need to study about the Pradhan Mantri Kaushal Vikas Yojana, one of the schemes that was started in 2015. It has been extremely successful. It is running. People are getting trained, and people have been able to create a lifestyle for themselves, because the focus of this scheme has been that it trains people who want to join the vocations, the various kind of vocational training programs, and also it provides a bridge course. Like for example, if somebody has been a carpenter all his life, but the person has not been able to improve his skill, so the Kaushal Vikas Yojana will provide employment to somebody who is aspiring to become a carpenter, also somebody who has been a carpenter but wants to improve his skill. Somebody wants to become a beautician, so they have courses for that also. So those kind of things. Then we have Jan Shiksha Sansthan scheme, National Apprentice Promotion scheme. All these are aimed at improving the kind of employability of the individuals. All right. Then we have Craftsman Training Scheme. We have Making India Skill Capital of the World, Skill Acquisition and Knowledge for Livelihood Promotion. That Sankal. That's the scheme, just have to read about them. So these are the kind of development that have been done for the skill development. Now we are talking about one section that we missed out here, the sector-wise share of the total employment. Now, when we talk about the sector-wise share, we see that in manufacturing we have 39%. All right. Then after that, the other sectors come in. For example, we have education here, and then we have the IT and BPO, etc. All right. One thing that you should remember is the quality and affordable health for all. Simply, it is telling us about the track or the mechanism that has been followed by the country over the years from 2014 to 2022 for better overall health. In 2014, we have Mission Indradhanush, Rashtriya Kishore Swasthya Karyakram. So these different names, you may read through them so as to get an idea, so that you will understand where we have reached till now. Till 2022, this is where we people are placed currently. All right. Along with that, there are certain indicators that a person must remember, that the students must remember. Insurance finance scheme, total fertility rate. Then we have the institutional births. Then we have the neonatal mortality rate, infant mortality rate, child under 5. All these, this whole chart has to be understood well, and also you people must know whether it has decreased or increased. So as such, I keep telling you people, okay, all these things, these are like for the fertility rate and the institutional births and the neonatal mortality rate, etc. These I keep telling you that normally in the other things, you do not have to remember the trends, but you do not have to remember the numbers, but for these, you have to remember the trend. Also, you have to remember the numbers. All right. Now, rural healthcare system. This is something quite basic that you must keep in mind. In the rural areas, what we see is that we have a three-tier system. The first thing is that there are certain sub-centers, then we have the primary health centers, then we have the community health centers. All right. So once a person falls ill, there are certain sub-centers where a person goes. If the treatment is not available in those centers, and the person will go to the primary health center, and if that does not happen, it goes to the person will go to the community health center. This is something that we are studying. Why? Because the focus of the medicine sector in our economy has been to align these quite well. In such, and for doing that, what we have done is that we people have come up with the Ayushman Bharat scheme. In the Ayushman Bharat scheme, we have been focusing the health coverage reaches to all the nooks and corners of the country and to people across different earning groups. All right. So we will see that we have health and wellness centers, etc., that we will get to study. Ayushman Bharat and new education policy are two things that you must definitely study extremely well when you are concerned with these two, when we are concerned with this chapter of the economic survey. Now, we will talk about certain things such as the health expenditure estimate. We have already mentioned that 2.1% of the GDP we are spending, which is less than what was recommended, but still we are spending a good amount, though we need to improve. Certain major government initiatives that are for the health sector are, first of all, the universal immunization program. Then we have E-Sanjeevani. Then we have Ayushman Bharat, most significant, definitely National Deworming Day has been introduced there. Now, in the National Deworming Day, as such, we would, this would be done for the government schools, etc. But now the private schools and the other institutions have also joined in this thing. All right. So the next thing that is significant is the National COVID-19 Vaccine Program. In this, you need to read about the COVID also. All right. Then we also have a few things that we observed during the time when COVID was at its peak. At this point of time, we saw that the idea of Atmanirbhar Bharat gained extreme significance because we people actually did a lot to improve the, our capability of tackling COVID. Dedicated COVID infrastructure was built. 3-tier arrangement was made. COVID care center, COVID health center, oxygen supported isolation bed for moderate cases, then COVID hospital with ICU beds for severe cases. Then we also have pressure swing adsorption oxygen generation plant. This is the one that I was mentioning earlier, where the adsorbents are there to remove the oxygen, and oxygen plants are made in the premises of the hospital only. Then we have also improved our doctor-patient ratio. Earlier it used to be 1:700 something. We have come to 834, even though the WHO norm is 1:1000. Then one important thing that has been mentioned here is CoWIN. CoWIN is nothing but it was an application that was developed. It is a cloud-based IT solution for planning, implementing, monitoring, evaluating COVID-19 vaccines in India. It provides real-time stock taking at the national and the state level and the district level. It provides registration in 12 regional languages. All right. So these are the basic certain features of CoWIN. Then we have the social protection for the rainy day. In this, again, what is being mentioned? Certain insurance schemes, which include Pradhan Mantri Vaya Vandana Yojana, Pradhan Mantri Jeevan Jyoti Yojana, Suraksha Bima, Shram Jyoti, Vendors Atmanirbhar Nidhi scheme, and then the Pradhan Mantri Mudra Yojana. Development of India's aspiring rural economy is the next topic that we can talk about. Now, what is happening here is that population living in India's rural area currently stands at 65%, of which 47% are depending on agriculture for livelihood. All right. So this is something that we people already know. 65% of our population is living in the rural area. 47% are on agriculture. Now we need to provide things for them. So what we are trying to do is to consider different areas where improvements have to be made. And then we are clubbing those areas so that each nook and corner of the country is well informed. All right. So we will see schemes such as, for example, there is a Jal Jeevan Mission, which targets the rural area in itself. Then, Awas Yojana. Then there are several other specific schemes that are completely targeting these only. All right. So this chart will tell you a few of the basic schemes that are there high up on our charts. For example, the quality healthcare, then all weather-based roads, equipped schools and teachers should be there, livelihood security, etc. One thing that we must keep in mind are that there are few focus areas here. These focus areas will give you the names of certain schemes. Again, you just have to go through these schemes when you will be reading about these schemes, and certain apps are also mentioned. You should know that why these exist. For example, Deen Dayal Antyodaya Yojana, National Rural Livelihood Mission, these are there. So these are there on the mind of the government. So you people have to go through these. All right, Jal Doot app, I would suggest just keep this thing in mind. And then all these are existing in our country for a very long time. All right. So the one thing that you must keep in mind is that in our country, the most significant thing is that we have a social infrastructure. The social infrastructure requires certain help because we have a large population. In that large population, we have health, we have education that requires certain support. All right. For providing that support, what we are doing is that we are coming up with certain potential schemes that will change the scenario for the country. We have a very large population. Therefore, we need to improve this sector. Therefore, in this context, we can just go through the chapter at a glance. The first thing that we must keep in mind is that, first of all, there is Sabka Saath, Sabka Vikas. The second thing is that government expenditure for social security steady on rise. The health sector is inching towards national health policy recommendation, which is of 2.5%. We are already at 2.1. Multidimensionally poor constitutes 16.4% of the population, and we are saying almost 18% is already at that verge where it might fall into that. Social sector imbalance is being mitigated through the reforms like aspirational district program, labor codes, utilization of Aadhaar, improving the education visible both the development were implemented for the old, the underprivileged is also given the right impetus. Schemes and initiative intended for the social security. So you are just reading through these things because in this chapter, the first thing and the most important thing that you need to do is to go through the names of the various schemes, and all these you need to know in depth about these schemes. All right. So in order to know about these schemes, you need to go through the documents through which you people have been referring to these schemes earlier also. And if any other help will be required, we will be here for you, and you can ask those questions also to us if, at any point you are not able to comprehend something. All right. So this was it. These were the chapters from 4th to the 6th chapter of, economic survey for you people. And after this, in the next class, we will be taking up the next 3 chapters, and hopefully in the next 2 lectures, we will be able to end this thing. So if there is something that you people want to clear, you can ask me, or else we'll end this session for today. All right. So since there are no questions today, you people can study these topics, the 6 chapters that have been covered. And then if there are any questions later on, you can just let us know. All right. Okay. Thank you. Thank you all.
Thank you, ma'am.